Hello, welcome back to Coinscrum Markets. I'm delighted to be joined today by Travis Schwab, CEO at Eventus Systems. Hi, Travis.
Hey, Paul, how are you?
I'm good, thank you. And welcoming back an old friend of the show, David Olsson, Global Head of Institutional Distribution at BlockFi. Hi, David.
Hey, Paul. Good to see you again.
Thanks for joining us, guys. So we're going to take a look at the hot topic of recent months, the big growth in institutional adoption, and get two perspectives, I guess, on what's changed over the last year or more that's, I guess, finally enabled these guys to come on board where they might have had problems in the past, and really looking at the whole trading and market ecosystem and infrastructure and where we're at on that side of things. So I guess one of the things, two of the main areas that we've seen improvement over the last year or two has been, more regulatory clarity, which I think has given some of these institutional guys a bit more comfort to come in and enter the market. And again, especially from the earliest days, a big improvement, although still more work to be done around the broader market infrastructure, the exchanges themselves in terms of, the quality of their matching engines and systems and connectivity. It's all edging towards standards that they might expect in traditional markets. So, both of you, if you just give a little bit, I know part of this conversation is that you both come from that traditional world and have a lot of experience from the traditional market. So could you both just give a little bit of a brief background in terms of what those experiences were? Travis, maybe we'll start with you.
Yeah, no, happy to. Thank you, Paul. So Travis Schwab, I've been in the capital markets for 25 years, really across the exchange landscape, vendors, brokers, banks, you name it, buy side as well. And so for the past 6 years, I've been the CEO of Eventus Systems. Eventus Systems is a RegTech company providing trade surveillance, market risk, and transaction monitoring solutions to really all asset classes around the globe, with a really interesting and strong presence in the digital asset space.
Great, thank you. And David, your previous world.
Yes, so I spent a long time in traditional finance. Started my career at prop funds and a hedge fund. I was at Merrill Lynch and Credit Suisse across kind of structured financing and structured products. And equity derivatives, and then moved to BlockFi last May to lead the distribution effort there. And for folks that don't know what or who BlockFi is, we're a fintech platform and financial services company, which is aimed at the crypto ecosystem for retail and institutional investors.
Great, thank you. So maybe start with you, David. In that previous life, I guess many of your actual customers back then, when you were kind of dealing in wealth management, would be high net worth individuals and funds, hedge funds and traders. And I guess that, when we talk of the institutional entrants coming into this market, I guess that's the first wave and that's the first tier, and then we're moving up the rungs of the ladder. But we're already seeing pension funds, et cetera, allocate, so maybe we're moving there faster. When you first kind of joined BlockFi day one, started looking on this side of the fence, what shocked you the most in terms of what was different to that?
Yeah. I think there are a few things. I think number one was the market fragmentation, that there's 40 plus exchanges around the world, and that the volume of the number one cryptocurrency, Bitcoin, was split amongst all these exchanges. And how difficult it was for investors to manage moving coins and assets from one exchange to another to make sure they were accessing that liquidity. I think the other thing was that how some of the crypto native funds in particular were relatively small back then. Things have changed with basically crypto's market cap sort of quintupling over that period of time. So some small funds are not so small anymore, and they've gotten big investors and blue chip names. I think the last thing that surprised me was that people like like myself, like Travis, who had taken the plunge into crypto, that there were a lot of people from the traditional space that wanted to come into crypto and saw it as the future. And I remember I had a conversation with Christine Sandler, an old boss who's head of sales at Fidelity Digital Assets. And I said, am I too late to get into crypto? This was last year, early last year. And she said, using an American analogy of baseball, if this was a baseball game, then I would say that crypto's, it's not the third inning. It's not even the first inning. We've just pulled into the parking lot. So you're very early on. I'm not sure we're still in the parking lot. We're probably in the stadium now, but it still feels pretty early.
Okay, so a lot more hodling for people to do. Lots of room for hodling. But just quickly before we kind of ask the same from Travis about his experiences from traditional capital markets. I think everyone. I mean, I've been around. I was in the markets like late '80s, early '90s, and we do have this huge wall of like regulation now. But that really is a more recent phenomenon, really, for the last 15, 20 years or so. I mean, in other markets, it was very loose for a long time. So, it's not all bad. And, financial institutions have had to deal with onboarding customers and, from different jurisdictions, high-risk jurisdictions, high-risk clients. So I guess there's certain similarities that we've seen before. Would you say that's the case as well, David, from, your experience with onboarding other clients? In other markets?
Yeah, I think the way that BlockFi is set up, it's very similar to except that it happens probably a lot faster than at the banks. But we still, we're regulated in the U.S. as a money service business. So by FinCEN, Department of Treasury, we have to do the same thing, AML, KYC. So we AML, KYC the entity and the person, and the people behind it. And we also, do chain analysis on the coin. So from that perspective, it feels very that the whole architecture around how we deal with clients feels very similar.
Great. So Travis, Eventus Systems, as you said, you're building very high-end market surveillance technology and tools to help exchange operators, to help regulators identify bad actors in the market. So again, from your previous career, when you started engaging in this market, what did that look like to you? Were there shocks there, or was it just everything that you've seen before?
Yeah, it's not shocks, or at least you try to act like there's not shocks. But there's a lot of analogs in the traditional asset classes, and I think one of the unique things in the digital asset space is you're able to pull kind of the best pieces of those traditional asset classes when you're setting up these programs or you're setting up your infrastructure. So I don't know if there's any super surprising things for me, or as the firm was entering into the space, the fixation on security is pretty overwhelming from a implementation standpoint. Now, obviously, Bitcoin is pretty unique. If you don't have that hash, it's a problem. So that security thing that security focus really drives a lot of decision making. How they implement software, how you engage with them from a client servicing standpoint and everything else. And so that really was probably the biggest unique aspect of moving into the space compared to some of the other traditional asset classes. From a volume standpoint, from a exchange infrastructure standpoint, the exchanges that we've been dealing with, the other area that it's in constant flux. I think there was obviously this mad rush to try to get something out, a matching engine out, an infrastructure out to try to capture some market share. And then there's been this, as they're across asset classes, this evolving going time. It's just that evolvement in digital assets is so compressed, right? Things are happening on such a fast scale so that it's a little challenging just to keep pace with the innovation happening at our clients. But overall, it's not like we had a wholesale change how we are doing things for the digital asset space compared to some of the other asset classes.
Yeah, sure. And I guess, people talk about, identifying market abuse and these bad actors, but market abuse is as old as markets themselves. If someone can try and take advantage of something, they will, and they always have.
Nothing unique there. That's right. There's nothing unique in that. That's right.
As markets have become digitized, there's just been different methods for people to try and abuse these markets. And so,
that's right.
And at the same time, it's a game of cat and mouse, and hand in hand, people such as yourselves or firms such as yourselves are looking to develop the tools to keep on top of this. Can you just dive into what you've developed at Eventus a little bit more and tell us, and around the technologies and the kind of the new tool sets that you can use in these markets?
Yeah, happy to. So we have a platform called Valdis. That's the actual software platform. And just like, other, trade surveillance solutions is you're taking in market data, you're taking in life cycle data, you're marrying those, that data set together along with some other ancillary reference data and things like that. And then you provide a system infrastructure to, you can, really the focus of the system is alert generation, right? Alerts. And why are you generating alerts? Well, you're trying to surveil for different activities, different patterns and practice. It's not just manipulation, right? There's lots of different requirements that financial intermediaries have regarding, as it relates to their regulatory status. And so, people or firms use our platform to do a lot of different things. Are orders marked correctly? Are they, monitoring for wash trades? Are you, forming your order correctly, right? So there's this big litany, hundreds of different procedures that our platform kind of covers across asset classes and across kind of geographic areas. Where it gets kind of interesting in the digital asset space is just the sheer number of alerts that we're dealing with at some of these venues. And a lot of that is because of our approach is a little bit different in the fact that there's a kind of a fixation in the surveillance industry to reduce false positives. And we actually take a little bit different of approach there. And what we're trying to do is we call it casting a wide net, because we think there's actually data and intelligence in those alerts. And so you might generate tens of thousands of alerts a day, and we have clients that do that. But what we do is provide automation and machine learning technologies to really boil that group of alerts and bubble up the most actionable, to where you might have 30,000 alerts on a day, but you're really looking at 30 that are really the most relevant to what is concerning to you as a business. And so I think that's, from a digital asset space and crypto space, that's really where we've driven that alert resolution and automation side of things, because of the casting of the wide net. And so we think that's a really interesting aspect of that. Plus, there's a real, as David was talking about, the AML KYC is marrying the trade surveillance side with more of the AML transaction side of things. And so that also is being driven in a really positive way by the digital asset exchanges. And normally in the traditional asset classes, those worlds have been fairly bifurcated, and in crypto exchanges, they're not.
Okay, cool. David, you mentioned earlier that one of the things that stood out for you when you came onto this side of the fence, market fragmentation, and in traditional markets, things like clearing, central clearing is very common. So, it's easier to get this sort of holistic view of the market, of the participants, which is much more difficult in these markets. And, and beyond that, we're seeing kind of moves in companies such as BlockFi themselves moving into kind of prime services and things like that. Again, trying to kind of bring these pieces together. What do you think is still missing, or the most critical pieces of the market infrastructure that are missing, that the industry as a whole could do well to work towards together?
I think I'm not sure that they're necessarily completely missing. I think there's some things that need to be improved and just kind of solidified. And I guess I would say that, as you said, you mentioned settlement, for example. Settlement is one place that can be particularly scary for people that are coming from traditional markets into crypto, and having to send coins out and not really knowing whether they're going to end up where they're supposed to end up. And so there are networks like Fireblocks and Curve that help with that. And I think getting more of the institutional space onto those types of networks and making sure more exchanges are connected is really important, so that institutional investors feel like they can come on to do that. And then, so I think it's basically connecting all of the different liquidity pools and making sure that everybody's speaking a common language. I think something, that we do a bit, as you mentioned, sort of a prime, almost like prime brokerage, like experience for our clients is credit intermediation, where we can actually execute trades for clients on different exchanges, and we face those exchanges instead of having the client face them directly, and to give them a more seamless experience. And I think what Travis is doing is really interesting, because you can kind of marry up the client experience with, okay, what are the exchanges where we think are the ones that are battle tested, and the ones that we think are the ones that we want to allow our clients to trade on, or divvy up for our clients to trade on.
And Travis, from your perspective, again, you said, like, in terms of your systems, it's been relatively straightforward, cut and paste, being able to use the same technologies in these markets. But would there be something that would make your life a lot easier, or the industry?
I don't know about life a lot easier. What's challenging for us really is the explosion of volumes, just from a scaling standpoint, and technology. Is we've started, some of our clients from 3 years ago were doing 15 million messages a day, and now they're doing 1.5 billion. And so you think about that scaling challenge and how to handle that on a consistent basis and give really good performance is pretty challenging. And it's not normally, at least within the traditional markets, you can kind of see these periods of volume and volatility spike, and then they ebb down to kind of this normal level, or at least a baseline level. In the digital asset space, we don't expect that to keep leveling, right? We expect the volumes to keep growing in almost an exponential fashion. So that's proving to be, just from making sure our technology is operational at the scale and time period that you need to run it at is challenging. And so that's been an interesting aspect of this. There's lots of different things, pieces of infrastructure, and David was talking about that, it's interesting in the digital asset space, the exchanges now are hyper vertically integrated. So really they're doing everything for clients, from opening the account all the way through custody, prime brokerage, and everything else. And what is happening in the marketplace is you have firms like BlockFi. They're taking pieces of that ecosystem and making it a more resilient ecosystem, which will attract institutional investors, because you need those levels of safety and transparency. And so, it's that disintermediation that is happening in the traditional asset classes is actually in reverse in the digital asset places. You need more intermediation happening with financial entities. And so we think that's a really interesting part of this entity. And so whether it's a settlement, whether it's clearing, whether it's a consolidated tape, all of those pieces are in some level of process or conversation. Regulation, regulators, SROs, all these pieces are in process, and it really opens up opportunities for firms like ourselves and BlockFi.
Yeah. And I guess the other thing, for everyone, if you've been around for a while, that maybe a lot of these exchanges, which have become kind of globally dominant now, the very early ones were literally built out of people's bedrooms, and they were building their own matching engines and systems. It seems that as the market's grown, they've kind of taken a more tried and tested approach from traditional markets, and chosen to now start licensing in some of these core technologies, which is essential to make more robust marketplace. Of exchanges now that something like market surveillance is a more recent phenomenon for them to have to adopt, have they learned lessons from the past, or are exchanges, when you're having conversations, are they saying, well, we're building our own systems, or are they kind of catching on that it makes more sense to be licensing these things in?
Yeah, it's a great question. It's always a combination, right? You have firms, and I think that if you think about the exchange landscape, a number I heard, which was I think an insane number, is 750 crypto exchanges around the world. There might be that, and they pop up all the time. Obviously, that's going to consolidate dramatically over time as liquidity does. But if I think that marketplace or that ecosystem is going to be bifurcated into two parts. Is one that's going to be interested in attracting institutional participation, one that's not, right? They're just they're going to focus on retail side and not focus on building a lot of that infrastructure necessary to give the institutions confidence. And so in that space where we are participating, where the exchanges are interested in institutional adoption, most of the time they are now looking at a vendor solution because, and this cost benefit has been going on, for many years now, as many banks or many large institutions thought they wanted to do everything themselves. Well, it doesn't make sense. You can't justify the cost benefit to do it internally because that's not a value add to your business, to your clients, or anything else. And so they're going through that review, and the digital asset space is going through that review now. And so how can you lever a ton of this innovation happening within the vendor space or the participant space to help your business grow faster? And a lot of ways that's partnering up with firms like BlockFi or Eventus so that they can move faster and benefit from the community, right? Is if you do it internally, you're only obviously eating your own dog food, as the saying goes in the software development space. We have the benefit of now many exchanges that are feeding us ideas and ways to do things better. And so that gets compounded or built within the product and then redistributed out to everyone else. And so there's obviously a really good network effect there that's taken place.
Yeah. And I guess the other, one of the unique things in this market, in these markets, is certain new data sets that we're able to kind of utilize and analyze. And David, you mentioned obviously processes and policies that BlockFi have for AML requirements, which are separate from kind of maybe trade surveillance itself. But all these things tie in together, and especially with this fragmented market. Travis, what on with blockchain monitoring and forensic monitoring systems out there that companies such as BlockFi are adopting to make sure that they're ticking those boxes as well? Are you starting to see a merger of like these systems so you again get a much more holistic view? And is that potentially offer us something or better than we can actually get in traditional markets?
Yeah, what is the ultimate irony, I think, in digital asset space is you probably have way more transparency in cryptos than you have in any other asset class. It's hilarious in a lot of ways, right? I mean, the whole creation of the asset class was to go outside of traditional and to have driven on anonymity. And you have effectively the opposite, is you have really, really good transparency all the way out into the chain that you do not have in the traditional asset classes. And so it's, I find it pretty crazy actually in this space. Yeah, I don't know, David, if you agree with that.
Yeah, well, the example I always like to cite is that I was trying to get the story up before this recording, but there was a case where the FBI busted a hacker who stole, I can't remember how many hundreds of Bitcoin, but in Florida. And basically they were able to use the blockchain to trace back the transaction to him. And that sort of thing you just can't do with fiat. And we have, when you do, and obviously, Paul, you referred to the fact that I had, a stint in wealth management. And when you did KYC, the only thing you could say was where was the money, the last stop the money was coming from. Whereas in blockchain and Bitcoin, when we do chain analysis, we can see where the Bitcoin and other cryptos, the whole history. And if we see that we see that it was mined, for example, created through mine. Okay, great. This person mined it. They bought it from a miner. That coin's clean. If it's gone through some address where that looks like a mixer or something like that, the coin's not clean. And some people will refuse. We've had clients say, okay, I've got 2,000 Bitcoin. You say, okay, we're just going to run chain analysis on those Bitcoin. And they say, oh, sorry. I'm going to use another provider.
Yeah.
So I think that's right. Sorry, Paul, just to jump in there, David's totally right in the fact that you do have this, we can go all the way from mine all the way through the trade, pretty seamlessly with, firms like ours. And then, David talked about chain analysis. There's chain analysis, there's CipherTrace, there's lots of the firms in that space, and you can marry those worlds pretty directly. And so it really provides ultimate transparency compared to other asset classes. So I think that should actually attract. It should be actually one of the things that attract institutional investors over time is you really do have better transparency than almost any other asset class.
Yeah, I mean, I've always said that, you know, Bitcoin will ultimately look like two networks at the end. I mean, it might not be a popular opinion, but, you know, people want to conduct business, and they want to conduct business legally, and if they need to conform to laws and regulations, they will. And just in, you know, our traditional economy, a certain percentage of it is a black market, and people that want to stay outside of that system. And you know, you'll probably see the same thing pan out in Bitcoin, and you'll have a very kind of clean, identifiable network, and you'll have another portion of the network that doesn't want to conform, and that's within their rights. That's absolutely fine. But from, you know, the perspective of the authority, that should be a positive thing and a good thing. It gives them like two clear targets where they need to kind of apply their attention. So I think, you know, ultimately people will start to understand that, you know, where these were such big concerns before, that it was always clear, I guess, if you were looking at it closely, there was potentially a lot more benefits. So just moving on, because I know we're kind of just being conscious of time. You know, I think, as we know, we've seen, you know, the maturation of these markets, and I think it's in everyone's benefit within the industry to work together where they have, you know, mutual goals and objectives which will make the ecosystem stronger. What are you seeing in terms of engagement with regulators? What, you know, the industry itself is doing to solve these like mutual problems? I know that you've got some conversations going on this week, I think, Travis, in New York with the NYDFS. Yeah, what's you know, what are the conversations there?
Yeah, they're doing a tech sprint actually that our global head of regulatory affairs is participating in, and it's really interesting. You know, so they've kind of laid out 4 problem statements all around kind of transparency and surveillance within the digital asset space, and they have, you know, assembled a really strong group of participants, industry participants. And they've kind of collated around 9 teams, 9 different solutions to these 4 problem statements, and they're doing their final pitch actually tomorrow, just you know, to see who I guess wins. I don't know, you know, what you win, but at least you get credit for proposing these solutions. And so I talked to Joe yesterday or so. He's really impressed with the level of engagement, the access to the regulators that they have in getting guidance from the NYDFS. So he thinks it's a really worthwhile. It's a big time commitment, but really worthwhile. So he's been really pleased, really about how it's been conducted and what the output, what he thinks is going to be.
Right, cool. And David, I know obviously BlockFi's got global coverage, but you're based here in the UK. You cover EMEA. What are you seeing in terms of engagement over here? How's that changed? And
I think it's been somewhat slow, and probably the pandemic has kind of thrown the wrench in the works of really sensible regulation or talking about it more sensibly. I'm not sure which, but obviously the UK enabled or implemented the registration for firms that deal in cryptocurrencies, which was a first step. There's MiCA in Europe, but that's, you know, at least 2 or 3 years away. And then it's country by country. So it's really difficult right now to navigate. You need to get outside law firms in every single country that you want to do business with. If it's, you know, it's a solicit business, not necessarily if it's reverse inquiry. So it's, you know, we're in a difficult spot. You know, you've got, and then Christine Lagarde, who's running the ECB, obviously had some negative things to say about Bitcoin, but then they're also looking at launching a central digital bank currency, which, because it has the same properties of Bitcoin, because you can surveil it. And so there's a bit of a strange, you know, oxymoron going on there. But yeah, so hopefully in the next year or two, we'll see regulation pick up. And I think particularly for investors and the institutional investors we talk to, there needs to be clarity on if a wealth manager or a fund wants to allocate to crypto, how can they do that and still maintain a regulatory status where they can distribute their fund easily? And that's, you know, and I think, or their services easily. I think that's something that needs to be tackled.
Right. Okay. Well, hopefully we'll get there. Right. We need to wrap up shortly. Just thinking further ahead, looking further ahead. I know DeFi has been a topic, and something I guess that is on both your radars just for future opportunities and potential. Also seeing some very sophisticated forms of front running and market abuse across that sector as well. Travis, have you started looking at that part of the ecosystem to see where you're going to need to be, applying some of your own resources?
Some of the tech, not so much from our client base yet. To be perfectly frank, Paul. I think the DeFi aspect of this of the trade probably is not going to be adopted in the same way on the institutional side as it is on the retail side. Mm-hmm. That could change. Obviously, things are changing fairly quickly, but at least right now, that's not the focus of our existing client base. And we'll see, and prospects, and we'll see kind of where it goes. But that will be a challenge. There's no doubt how you do surveillance, in a DeFi world. But my assumption would be that's further afield than the more kind of traditional trading on exchange for institutions.
Yeah, absolutely. And David, are you seeing demand in that side of things, or are people still being quite vanilla?
Yeah. Well, we saw a surge in the DeFi summer. We saw a surge, and obviously our core business started with borrowing and lending, and there was a lot of demand to lend Ether, and in particular to put onto DeFi, I suppose. Mm-hmm. But since then, there's still real interest, and clients would love for us to be a portal. But the reality is again, we're regulated in the U.S., and also you've got the whole Mnuchin rule still hanging. Even though we've got a new administration, there's still that rule overhanging the industry. So I'd say for people that want to look at DeFi, it's best to look at a fund manager that potentially could help you out there.
Right.
For us, it's not, it hasn't been really tested yet. Can't find a way for institutional investors to get into it. We are a member of the Chicago DeFi line. So the technology and the idea has legs, mm-hmm. but it's just the implementation's a ways away.
Yeah, as I said earlier, if markets can be abused, they will be, and there's some fascinating stuff going on there. I mean, I've read some incredible articles, so but that will be addressed over time. Guys, we need to wrap it up there. Thank you both for joining us. It's been a fascinating conversation. Hopefully anyone watching that had some concerns about the state of the infrastructure in this world, it's clearly has improved a lot and is continuing to improve. So I think it's essential that we continue as an industry to build trust and grow trust, and it seems like we're on the right path. So thanks for joining us and sharing your insights.
Thanks, Paul. Nice to be here.
Thanks, Paul, for the invitation.
Cheers.
Take care.